Okay, after 3 minutes, we have 36 people. Sorry, 34 responded, which means some are yet to log in. If anybody did not see the poll, you can immediately send a chat message. Okay, so some did not log in time. Okay, so we have 34. Let's go ahead. Good morning to you all and welcome back. Today we are going to focus on emerging markets with reference to diversification. We have been discussing in the past few sessions about diversification, except for the previous session where we deviated to discuss the leveraged buyout. Today we will come back to the discussion of diversification, but we will look at the emerging markets. And as you are aware, after the break, we will be discussing the case of Baby Koç, that is Koç Holdings, based in Turkey, to see how things have worked out for them in terms of diversification in emerging markets and how the performance was over the years and where they are, where they had to take a decision about going ahead. So that's about today's session. Of course, we will be calling back many of the discussions that we had earlier as part of diversification, related, unrelated, etc. in discussing today's thing. Only thing is that those things we are applying to emerging markets to focus on some of the issues. In the process, we may also discuss a few things about India as an emerging market for diversification. Before we proceed, as usual, we will be having a summary of the case discussion we had in the previous session, which was about Endo's proposed acquisition of Algos. We knew that Endo was an LBO coming out of DuPont, Merck Pharmaceuticals, and it was a management buyout with the private equity firm support involvement. Therefore, there were certain terms and conditions of the LBO binding on the Endo entity, which would affect their decision or approach strategy to acquire Algos, in addition to the merits and demerits of Algo acquisition itself. This is what we have discussed. We had on one side you suggesting whether merger is good, not acquisition is good or not good. On the other side, we needed to first get the eligibility for acquiring Algos, which was what we examined, and we found there was an issue there. So as summary, we, of course, some of you, means particularly the groups presenting, had extensively discussed about the cash position and so on. During the discussion, open discussion also, some of you highlighted the cash flow related issues. So I am just giving the cash flow analysis itself. As you can see here, the exhibits show cash position, and I have included that here. And I have separated the cash flow position of Endo and Algos. And then I have also given the summary of the two, both cumulative operating cash and the balance sheet cash. But you will also see some green numbers. Green numbers are some projection. Some projection means something, some number approximately using some logic I have put just to illustrate how things will be moving in terms of cash flow. So you can see that there is a spelling error, Kelso. Kelso's post-fifth year exit may occur in 2002. On adding Endos and Algos incremental operating cash flow, IRR outlook could be much better, right? If you apply that on both, it would be much better. Of course, we have the operating cash flow, which is used for repaying the debt service, amortization, etc. And balance sheet cash is the asset part of it. But that may not be used for repaying debt because it has to come from the operating cash flow of the business, right? That is where this operating cash flow cumulative will be important. But then we know that from the debt column, there is a debt. How much is the debt? Nearly 198 was the debt in 1999 by the data given there. Therefore, we know that the cumulative E plus A, Endo Algo cumulative operating cash itself is only $130 million. Therefore, the debt will not be paid even in 2003. Forget about 2002. 2002, when Kelso is supposed to get away, exit with 12x, up to 12x cash on cash, we have only 21.5 as the cumulative cash, which means only a very small fraction of the debt will be paid off at that point of time. Which means if we go by the LBO terms and conditions, this merger acquisition cannot happen until Kelso agrees to revisit the terms and conditions and rewrite the contract, LBO contract. So for Endo to act on this particular strategic measure initiative, first of all, its LBO has to be rewritten or LBO provisions have to be rewritten, which requires Kelso to agree to it. Therefore, without Kelso's approval, Endo cannot consider this as a viable strategy, executable strategy. So the first condition is that they have to go back to Kelso, request with all the data, cash analysis, cash flow analysis, IRR, everything presented to them, suggest that this is going to be good for you. Because with this acquisition, they are likely to get a better cash on cash when they exit. Therefore, allow this. So they should agree, and they should also agree to provide more or raise more debt because cash problem is there, and only after that Endo will be able to consider this particular thing. But for that, Carol Amman and the executives will have to present a very clear picture to Kelso so that they are agreeable to it. So looking at that, we will find what are Endo's priorities. We set the financial priorities, LB obligation, cash flow restraints, PE firms control, R&D requirements, valuation issues, default public IPO cost, value realization. All these issues are financial. Strategic, new products, synergy, competitive threat, acquisition price, all these are the strategic aspects, which all of you suggested while discussing. Operational, sales force issues, current focus, algos approval issues, all those are operational. So we have financial issues. If we address that, then strategic issues. If we address that, then operational issues. Or to consider financial issues are there, financial aspects are there, strategic aspects are there, operational aspects are there. All these were very clear when we discussed the case. Therefore, our inference would be LBO provisions might forbid Endo from merging or acquiring or using cash for other purposes. This is definite. I used might, but it's definite. To overcome this, renegotiations with the Kelso and refunding will be required. So Kelso has to agree to do some refunding. Subject to this, then this is the merger analysis. That is Endo's debate about whether to merger or not, and that leads us to Algo's product potential. And then R&D, Endo's R&D head's view also is positive. But then there are financial pros and cons. That is IPO next year without merger, immediate public company on merger, delay in Endo value realization on merger, possible higher cost than IPO, possible dilution of Endo's current ownership, considerable cash outlays for phase 3. All these would be the financial pros and cons, particularly the cons, right? Now, merger strategic pros and cons would be if we do not acquire, there is a product risk, value realization, delay, cash flow stress, value dilution, budget for existing projects. These are the cons. Don't acquire, sorry, these are the aspects related to don't acquire. And acquire will lead to justification. As justification, acquire justification would be future existential threat, low valuation of algos, and approval expertise. These are the pros for acquiring, right? And the problems out of do not acquire will be the issues related to that would be this, right? Or arguments. The pros for do not acquire will be that, and pros for acquire will be this. And the pros do not acquire will be the cons for acquire, right? So that is the way to do. And therefore, by considering all these aspects, the money part of it, like value realization, delay, cash flow stress, value dilution, all these issues are there. These are the cons for acquiring, right? Therefore, this would be one explorable thing, which some of you suggested. Strategic alliance with algos looks a more desirable option. But at the same time, there are also issues with that. And if at all we are very bent on acquiring, these are the considerations. That is, um, these are the justifications. For instance, we find that IRR, if we look at the valuation of algos with the net income expected up to 2003, we will be finding the discount rate will be implied discount rate, that is IRR will be 37.45% for 99 2003. But if we take only 99 to 2002, it will be minus 5.35. That is, if Kelso wants to exit per force in 2002, then the IRR will be disfavoring the acquisition because valuation of algos will be affected by the cash flow problems. But if endos and algos incremental operating cash flows are combined for 99 2002, then the IRR can be 69.02. That is justifying. Algos alone may not be justified, but if both are combined, the IRR expected for the same exit period is very high. Therefore, and Carol Amman can try to convince Kelso that yes, by combining you are better off because you can get a better exit cash on cash. That is the point. Therefore, looking at that IRR of combination, I will come back to you. IRR of combination, it may appear like acquire more compelling than do not acquire even for Kelso, because Kelso will be better off with such an IRR. And as regards the valuation of algos, you have an exhibit showing the EPS and PPS price per share of many companies, segment wise, pharmaceutical segment wise. So if you consider those exhibits and take out some companies which are comparable to algos in terms of EPS, I have found three other companies comparable. One is Dietide, which is similar EPS, W Chilcote, which is also similar EPS, and Matrix, similar EPS. And then look at their price. We will find they had an average price of about 8.88. Therefore, we can safely say that a price ceiling of about $8 per share could be considered looking at similar firms. You can see here, looking at the average price. So this is what we can conclude looking at all the data. Okay. Now, you can now question the whole discussion and conclusion. Okay. I have used additional data available in the case and exhibits also to present this. Mark. Sorry.
Yes, sir. So could you go to the IRR numbers 1 second, please?
IRR numbers are this. That is,
yes.
IRR is the implicit discount rate, which will make the NPV 0, right?
Of course, sir. Agreed.
So you will get that N+0, net 0, only when you use a discount rate of 37.45%. That is what the IRR coming out of algos values. Net incomes projected up to 2003 would be like this. You look at
yes, sir. So I agree. With the numbers. My only question is that when you're taking out IRR for endo and then IRR for endo plus algos incremental cash flows. My point is that why are we not considering a change in the risk or a change in the actual discounting factor? So this is the ceiling of the discounting factor for NPV for NPV to stay positive, right? But even at 37%, let's say, so ideally a company would use WACC. So even at 37.45% WACC, you would have a positive NPV. And if you combine the two firms, their incremental operating cash flows, even at 69%, they would be, it would be a good project, or at least a positive NPV project, not a good project. Why are we not considering the change in the risk?
1 minute. That is, IRR only says that this is the implicit returns, which means your cost of capital can go up to 37.45, whereas their average cost of capital is not even half of it, right? That is why generally the PE firms prefer an IRR of at least 25%, because generally the average cost of capital for a PE firm would be much less than that. Why? Because you have only a small part of equity. No? Equity has the highest cost, right? Whereas all other costs are 4 to, you remember that 50% is bank debt, which would be costing between 4 and 8% cost. And then you have next to that junk bonds, which will be costing a little higher, maybe 12%. Then you have mezzanine fund, which will be some 12 to 15% or something. Therefore, everything is very low. So average will be maybe between 15 and 20. So even if it is around 15, probably around 15 or so. So even if it is a 25% IRR, still it is very high because your average cost is never going to, WACC is never going to go to 25. So long as it is around 15, you still have positive returns of 10%. So 37.45% is a very high return, and you should be extremely happy because PE firms have an expectation of 25% IRR. Okay. But
agreed, sir. Sir, my only question or my only point here is that instead of using IRR to compare, we should look at the differential of IRR minus WACC.
That is what we are saying.
Because your WACC will change in case 1 and case 2.
No, but Mohak, what you are saying, I understand, but IRR is implicitly using WACC only. Why? Because
no, sir, not necessarily, sir. IRR is only the rate of return for which you would still have a positive NPV deal.
No.
While your WACC in case 1 will only be the risk of endo, while in case 2 it will be the combined risk of endo and algo post merger.
1 minute, Mohak. I don't know whether what you are saying I have understood or there is a little bit of misconception about this IRR WACC relation. Please remember, what is IRR is the highest discount rate which will ensure you no losses, right? And your discounting factor is actually your WACC, right?
Agreed.
And even if WACC goes up to 37.45, still your project will not make any losses.
Agreed, sir.
But if your actual WACC would be much lower than 37.45,
yes,
which means at an IRR of 37.45, since your cost WACC is not going to be even beyond 15%, around 15%, this project Algos is going to be very profitable thing, right? But if Kelso wants to exit in 2002, we have to recalculate the IRR for that 1 year reduced, which will be only minus 5.35, which means actually there is that it will be very loss making, means it's unprofitable, right? Therefore, it is in the interest of Kelso not to insist on going out in 2002. Clear? And it is easier for Amon to persuade Kelso to extend and restructure the whole financing of Endo. Clear? And more cash they will be providing, maybe as equity or allowing to raise more funds as debt. But if that happens, then Endos and Algos incremental cash flows can be combined when they become one. In that case, if the two cash flows are combined for the same 99-2003, the IRR will be 69.02, which means with a WACC of only about 15-20%, you are in for a windfall profit if you acquire Algos. That is the implication of this IRR. Is that clear?
Agreed, sir. Yes, sir. That was the implication which I was also considering.
Okay.
My only point to highlight here was that instead of comparing the two IRRs, we should be comparing differential of IRR minus WACC. IRR minus WACC 1 and IRR minus WACC 2.
Yeah, okay.
So I agree that WACC 1 and WACC 2 will be much smaller than IRR in case of 1 and in case of 2.
Correct.
However, for comparison or decision making purposes, comparing IRR to IRR would be wrong because there is an added risk of the merger and the post merger integration.
Yeah, okay, I understand. You are saying that the second WACC could be a little higher because of the risk weighting, right?
No, sir. I mean, it could be lower also based on the kind of integration that they do. Because if the synergies are realized really well, then the WACC would actually come down. However, in this case, we know that, I mean, there are other problems that we've already discussed and highlighted at length. the WACC will be higher after the
Yeah,
merger.
understood. I accept it. Accept it. Yes, you can always it is better to use the IRR minus WACC and see how much it is. Okay, agree. Is that okay?
Yes, sir.
Okay. Any other clarification or observation from anyone else? So acquire more compelling than do not acquire because of this, because you have huge IRR and as Mark said, even after a risk weighting, still it could be a huge difference between IRR and the WACC. Actual WACC is the actual cost, IRR is the maximum permissible cost. Therefore, this acquisition is going to be a good one for Kelso because it is likely to achieve the 12x expected in better way with the acquisition than without that. And we have also seen the valuation possibility also is there, what could be a good purchase price. So we can see that from the exhibit itself, we can make some conclusion, some inference that maybe around $8 would be a reasonable price considering similar other cases. So that's what I said. Now you can raise any issues, etc. Anything? Including the groups which presented heroically argued for the other side. No, no question, no comment. Our class was only one day before. First, what happened to all the question leaders? They are keeping mum, they are there, not sleeping. No, nobody is saying anything, asking anything. Everybody is keeping mum. At least Divya and Chitrang are saying no question. Okay. Okay, done. Let's move forward. And then let me go to who said um, is it Safer who said something about the company, what it did? I think so. You are there? Safer is there? Where is he? Not there. Somebody said something about the company, what it did, and I said we will not discuss that. When we come back for summarization, we'll talk. Who was that? Safer only, no? Where is he? He is absent today. Is he absent today? Is he absent? Let me see who it was. Yeah, Safer. Safer is absent. Anyone please update me on that? Absent, okay. Yeah. So he was saying something about the actual action of the company. Yes, what he said was correct. But there was no point in highlighting this at that point of time because that will influence your decision or discussion unnecessarily. That is why I discouraged him. But as usual, we see it at the end. Yes, in 2000, it acquired Algos in 2000. And public trading immediately started, but subsequently they issued new stock. Stock proceeds were used to retire bank debt because huge bank debt was there. And then they also acquired Paladin Labs in 2014. And they also shifted the part of their headquarters to Dublin, Ireland, whereas earlier it was different. They had 5 operating companies, and 2015 revenue was 3.3 billion, and net profit they had a loss of $1.5 billion. I was looking for additional information. I forgot what was the additional thing I found for more recent time. I think recently they have reduced their losses. Yeah, I think they have reduced their profit and I think they also reduced their losses. Sorry, reduced their revenue. There was some profit. Sorry, there was if I remember correctly, subsequently they reduced their revenue, and also I think the losses also were cut. High and rising losses since 2012, but there was a change. I forgot to update this. Okay, and it is not any more rising losses. The losses recent year, I think 2018 or something, the losses got reduced. But I think the revenue was also slightly lower, I think, if I remember correctly. Except for that, the situation is clear. They are still loss-making company. Okay, they are still loss-making company. And what happened to Algo's products, etc.? You can do Google search, Google uncle. You can ask what happened to Morphidex, etc. More details. If anybody finds that, please share it with all of us. We are all curious. Okay. So that's about the Endo Algo thing, an update. Now, moving forward, if you don't have a question, I'll move forward. Do you have any question? Or any additional information, anyone? No. Okay. If you don't have, we move forward. Yeah. We move to discuss the emerging market diversification issues. If you remember, we said while discussing diversification that there are three situations with diversification. One is related diversification successful. No, there are four situations actually. Related diversification successful, related diversification not so successful, unrelated diversification successful, unrelated diversification not successful. Four situations. That is, let me take the pen. We said related diversification successful, related diversification unsuccessful, unrelated diversification successful, unrelated diversification unsuccessful. These are the four scenarios with diversification. And we know even in the case of companies which are successfully doing diversification, as they move from one single business or very focused business towards more and more diversification, we know normally performance will also improve as diversification increases, and after some time the performance starts declining as more and more diversification happens, and we called this phenomenon of loss of value as diversification discount. And we said normally only 30% of the companies escape from this, and 70% of the companies face diversification discount. So overall, there would be a diversification discount if you consider everything. But in the 30% of the cases, instead of declining, it continues to go up. Maybe after some time it may come down, but at least for the time being, it will go up continuously. The reason is that in the related diversification, some companies are successful. Unrelated diversification, also some companies are successful. Using a different pen to distinguish, you can say related diversification, some companies are successful. Unrelated diversification, also some companies are successful. Right? That is the reason why this happens. That is not every case there would be diversification discount. In some cases, unrelated diversification, even unrelated diversification doesn't lead to diversification discount. This is the feature of diversification. Now, what kind of companies are successful in related diversification or unrelated diversification? In related diversification, many companies may be successful because they know the business. That is, in this case, knowledge of business. They know the business. You can see KB. KB means knowledge of business. In this case, unrelated diversification, it may be because of the process of diversification. Process of diversification integration. Process of diversification integration. That is when they get into new business, whether acquire or other, they are able to successfully integrate the new business into their existing business or business group, right? So, and also here, even the unrelated diversification may be related in some sense. For instance, if Hindustan Unilever is diversifying into another industry, which uses the same distribution platform, there is still a synergy in the use of resources, in the use of competencies and skills. That is the reason why even in unrelated diversification, some synergy can be drawn. For instance, when Tata Group is, Tata Sons is diversifying into a completely new business, still Tata Sons as a group knows many things about managing different businesses. So that capability to manage different businesses will be used in still another business also. So some synergy will always be there even in unrelated diversification. Plus, the company successfully doing the unrelated diversification will also may also have a very good system for integrating the new business into the existing businesses or portfolio. And in the related diversification, there is a that they know the business, right? That knowledge of the business because they are doing it with the related businesses. Like it could be horizontally related, it could be vertically related, it may be competency related. So some relatedness is there, therefore there is a high synergy. These are all reasons why we are getting success with some related diversification and some unrelated diversification. So in those cases, we don't find a diversification discount, but the gains are continuously there. And related to this, one point we need to bring, in addition to the synergy that they are able to get and the minimum synergy that they are able to get from even unrelated diversification and diversification integration, post diversification integration mechanism that they use, there is also another factor that is in certain economies where there are institutional voids and market imperfections, etc. Particularly developing economies, emerging economies, where the institutional system has not been established fully, the market has not been established in a very efficient manner. There are certain gaps in the economy, in the economic forces, in the strategic possibilities, which will help the company to actually do some kind of arbitrage. They will be able to do some arbitrage. So these arbitraging possibilities will lead to get some returns which would not be possible in economies where there is high level of efficiency and high level of institutionalization, institutional infrastructure. So that is the reason why in some of the economy they will be getting benefits that are not available to some of the other economies. In addition to using their own expertise in managing unrelated diversification. So in emerging markets, emerging countries, where there are a lot of potentials, new business potentials, because the existing business potentials have not been fully utilized because of resource constraints, like capital constraints, etc. The established businesses or business groups would like to diversify into new business opportunities as and when they emerge. So when they try to do that, will it affect their performance? It will not. Why? Because there are certain things which will not be allowed by the economy because of the market mechanism, imperfection in the market mechanism and institutional voids, etc. For instance, the stock market or the financial market might not have been fully developed. The banking institutions may not be able to fund all the businesses. because the businesses may not be able to fully satisfy all the requirements of the financial market. That is number one. Number two, the financial markets may not be able to provide enough funds required by the businesses which are finding prospective new areas. Plus, the evaluation system of banking or financial institutions would require very clear projection of the cash flows, the profits, and so on. But since the new opportunities are completely green, it may not be possible for the prospective entrepreneurs to completely show all the future cash flows with certainty, because there is a lot of probability associated with the different cash flow or other gains that can come out of new businesses. Therefore, the banks and financing agencies may not be fully satisfied with the kind of project proposal that they make. Under those circumstances, either because there is a shortage of capital or because there is an unwillingness on the part of the financial institutions or financial market to fund the project, some of the prospective projects may not be undertaken. But if the business group is actually making investment, they will be able to use the profitable businesses to fund the new businesses. Like ITC would be using the cash flow business to cash flow business tobacco to fund the new businesses they find lucrative for future. The same way, the Reliance would be able to fund some of the new opportunities using the cash flow position of their petrochemical businesses. Like that, many companies have highly profitable businesses, existing businesses, and a lot of free cash flow is generated there. Those free cash flows can be used to fund the new investments. Whereas if they have to entirely depend on the financial sector or the banking institution, they may not be able to do that. So these business groups expanding into new businesses would use their business group as an internal capital market, where they can subsidize or they can redeploy the resources where it is free, and where it is to be more profitable. So that is the way it will be working. In addition to that, because of the undeveloped labor market, particularly the professional labor market or technical labor market or trained labor market, the companies may not be able to recruit enough of trained manpower, particularly at a technical level or white collar level, etc., or at the executive level, because market is not having enough of resources, and trained people are not there available because enough institutions are there to not there to train them. But internally they have a lot of experienced people. For instance, if an initial business is having a lot of experienced people, they can redeploy a part of that resource, that manpower resource, to the newly started business, and under their guidance new people can be trained there, new deployment can be there. And they can also have internal training institutions, like there is a Tata Management Center, there is a Tata Training Institution. So those kinds of places, they can internally train people, and those trained people can be used for enhancing their expertise in their own different companies. And those people can be redeployed partly to new businesses to give the leadership to new businesses. And under their leadership, new manpower can be trained, even if the new recruited people did not have initial experience. So that is the way the companies will be able to, when they expand into many unrelated businesses, that is the way they will be able to use their own internal system as a substitute for the common resources, public resources like publicly recruitable experienced people, publicly obtainable finances, and many other things. And when companies are also located, the group companies are also located in proximity. They can even develop infrastructure needed for them. For instance, if there are a large number of group companies utilizing certain resources, like road infrastructure or hospitals, schools, and then port facilities, etc., they can have common resources to develop those things that will be useful for the companies. And they can also have other resources like post-harvest facilities or other logistics facilities commonly used by everybody. So all these are possible, and there will be a lot of synergy because they themselves are in many businesses, and they can commonly jointly use this resource. That is the reason why in emerging countries and developing countries where institutional voids are there, market imperfections are there, the diversification even into unrelated areas will not be creating the kind of negative vibes as in the developed countries where no such possibilities exist because everything is efficiently established. That is the reason why we needed to look at emerging market in the context of diversification. When the companies are going expanding into newer industries through diversification, even if those newer industries are unrelated, still they are not facing the kind of setback the developed country companies will be facing. So in short, what we are saying is that it will be like the groups return from the unrelated diversification will be like the 30% efficiently run companies in the developed countries which don't face the problem of diversification discount. Even in the developed countries, 30% of the companies don't face the diversification discount because they manage their diversifications very efficiently, very successfully. So same is the situation with emerging market companies expanding into unrelated areas as a business group. They are able to get certain advantages, and those advantages will be helping them to avoid the diversification discount. But implicit in that argument is also another point that over a period of time, when the economy becomes more and more efficient, the institutional voids are being gradually removed through liberalization, reforms, and other regulatory provisions, removal of regulatory provisions and refined regulatory provisions. Those advantages that is related to the absence of diversification discount will also disappear gradually. So that point has to be kept in mind when explaining the overall experience of companies over several decades in even emerging markets. And later on, when we discuss the baby coach situation, also this point need to be remembered back. And now, in respect of emerging market diversification, we can approach this diversification into many ways, at least two, three ways in which we can approach this. One is diversifying into emerging market, diversifying into emerging market, diversifying within emerging market, diversifying out of emerging market. Three ways we can take this emerging market diversification. So please don't get just to think that we are only talking about diversification within the emerging market. No, we are talking about three types of diversification. Diversifying into emerging market, like Walmart acquisition of Flipkart. So, so far Walmart was only doing the cash and carry business because only India permitted single brand retailing, but not multi-brand retailing with the foreign direct controlling for foreign direct investment. So foreign companies cannot set a multi-brand retailing here with their full ownership control. But the single brand retailing is possible, cash and carry is possible. Cash and carry means wholesale only to other businesses, small scale businesses. Like Metro was one of the, not one of the, Metro was the first to set up a cash and carry operation in India. After that, other companies also, including Carrefour and even Reliance, etc., set up such facilities in India. Of course, Carrefour some time ago left some of their investments in India, but Walmart continued. Walmart is still continuing as cash and carry. Metro is continuing as cash and carry. So this cash and carry business is already available, but to diversify into the multi-brand retailing, it needed to acquire an Indian company. And online was possible by acquiring Flipkart, although the other physical may not be possible immediately. That is how Walmart acquisition of Flipkart is something like diversifying into emerging market to enter a new area, that is online business, which is multi-brand. Okay, and we know all these online e-commerce platforms are marketplaces and they don't themselves do it, but they are providing a platform. Diversifying within emerging markets, that is the companies which are located here keep doing that. For instance, Hindustan Unilever last year or year before last year did a merger with the GSK Health Drinks division, that is Horlicks. Horlicks, it acquired that Horlicks and associated health drink part. So that is one thing. Like that, HUL is also year before last year most likely also wanted to enter the coffee business. They set up some coffee shop like a Starbucks shop somewhere, maybe in Bombay or so. So that is how they had. We can give an example of diversifying within the emerging market. Many companies are doing. Mahindra is doing to many areas. Tata had done to many areas. Even the passenger car manufacturer Suzuki, Maruti Suzuki is now doing horizontal diversification into many new segments, climbing up from the more basic level, going up and up with new advanced versions, higher level versions. And the third is the diversifying out of emerging market. Tech Mahindra's proposed investment in Canada some years ago, Adani's projects in Australia, Wipro's acquisition of US cloud firm Aperio, or Arvindo Pharma's proposed acquisition of Portuguese firm. All these are examples of diversifying out of emerging market. Sterlite's projects in Brazil, Sun Pharma's proposed acquisition of Novartis cancer drug, and then Hindalco's acquisition of Novelis, Tata's acquisition of Jaguar Land Rover, and Tata's acquisition of Chorus. So many examples are there. Tata Tetley. Like that, if you look at many players, you will find there are many examples of Indian companies or an emerging market company going out. Like that, Chinese companies are also going out of the emerging market. For instance, Alibaba has operation in India also in many ways. May not be as a retailer, but at least in financial, particularly funding the startup enterprises, etc. So there are, and there some of their group companies may also be present here. We know many Chinese companies are operating in India as well as in many other countries, including developed countries. All these are diversifying out of emerging market. And Russian companies are also present in other places. South African companies are present in other places like MTN, etc., which is a mobile communication company. Now, investing not just in Africa but also in Asia and Middle East part. So you out of this, you can BRICS countries, you will find each of the country companies have gone out of the country and diversified into other areas, not just in those markets, horizontal diversification, but also in other product areas. And the cumulative overseas FDI of India in 2017 was 155 billion. So we are a major source of, now not like in the past, now we are a big source of foreign direct investment, right? Our FDI means our companies are investing abroad. Some years ago, London mayor was actively going Indian investors, saying that we need to get at least $5 billion investment from Indian investors. Imagine, we were a colony and they thought that we are poor people, and London is now looking for Indian investors to invest $5 billion there, so that London can be a better place in terms of employment and industrial production. So that is the way now things have changed in the emerging markets. So all three types of diversifications happen in the emerging market. If in between you have something to say, I have said a lot of things, you can ask questions, you can make comments. Okay. So I said so many things about emerging market and diversification. I'm sure some of you may be having something to say. No? Apurva? Apurva?
Yes, sir.
I hope I did not speak. Of course, I spoke one way, and you people did not fall asleep. No? What happened? Apurva?
Yes, sir.
Yeah, Abhishek, you have fallen asleep, or yes means what? You fell asleep or no sleep? No.
Not sleeping, sir.
Okay.
Listening.
Okay. Abhik. Abhik,
Yes, sir. Hello.
do you think anything that I said during the last 10-15 minutes need any kind of clarification?
No, sir. No, sir.
Looking at the board, in the board, I said the different possibilities with diversification, related, unrelated, and how the discount happens and discount doesn't happen in some cases. How that those cases are similar to the emerging market cases. And in emerging market itself, diversification can happen in three ways, as here and so on. So you don't want to say something about some other examples, you know, where some company might have done in a certain way, successful, failure. You are not, any of you, not inspired to say something? No one?
Sir,
Ah, Surya.
in the categories we talk about out of emerging market, right? So I'm guessing this is out of emerging market to a developed market.
Hmm.
And is that the case, or are we? Is it also the into emerging market also in this?
Yes, into emerging market. That is diversifying out of emerging market could be in favor of developing country or emerging market. Like Chinese companies are coming in investing. I said Alibaba has business in India in different form. Tencent is here, and we know before we banned a lot of apps were doing business here, right? So
Yeah.
and earlier you have to remember that till about 10, 15, 20 years ago emerging markets were all part of the developing countries. It is emerging market concept itself came only some 10, 20 years ago. So till then, these developing countries were considered basically as a destination of investment. They need capital, they have a lot of business opportunities, so we should go and make products there and sell and make profits, right? But that concept has changed. Now the developing countries, particularly the emerging countries, are investing in even developed countries a lot. Think about Tata Chorus deal itself. It was worth $12.5 billion just one deal. And like that, when our companies are acquiring their companies, or Chinese companies are acquiring their companies, or South African or Russian or Brazilian companies are going and doing business elsewhere. These are in billions, not in millions. It is in billions, several billions, which means if we accumulate all the investments that emerging markets are making in developed countries alone, that itself would be running into hundreds of billions of dollars. It is not the old story. Is that clear, Surya?
Yes, sir. It is.
Yeah. Out of that, a large part could also be in other emerging markets. Like India definitely doesn't invest in other emerging markets, but China does. India may be doing only in some of the neighbors, etc., but not much. But the Indian companies are mostly going to Western markets and investing there, either Europe or USA, or in some cases in Australia, etc. The points about emerging markets, I already said, but I want to highlight those points. These are the points. Institutional voids and arbitraging possibilities. Any question on these arbitraging possibilities?
Yes, sir, if you can explain with some example.
You know, arbitraging, you know, from the financial point of view, international point of view, that is, you have two places with the two different conditions, and you can invest at one place in some item, and you use that to generate profits in other place. Say, for instance, foreign exchange. Suppose you there are two locations where a dollar is available, but the prices of two places different in terms of the currency. So you can buy a dollar at one place and sell it another place and get an extra profit. That is arbitraging. Same thing is true about funds also. You have funds at one place at a certain cost. You can raise funds there, which is lower cost, and then use that funds elsewhere where the fund is of higher cost, and you can earn a difference. That is also arbitraging, right? Clear? So that happens because there is no equalization across different regions and markets. So in countries like India, not everybody is equally placed. Some have access to better resources, some don't have access to. So if one can use that access to extra resources, and those resources are redeployed at other places to make investment or create products and services, sell it and get extra profit. That is a kind of arbitraging. Everybody cannot do that, right? Only the endowed people can do that, right? So business groups have a lot of experience, a lot of financial resources, whereas others also want to do business. Like Ayush, you want to do business, but you don't have money, maybe hundreds of crores. But a business group can easily do that business because they have the money. The
Yes.
opportunity idea is with you, but the money is with them, right?
Yes,
So
sir.
that is the way arbitraging possibilities arise. It could be because of market imperfections. They have a, for instance, think about the COVID time, goods and services bought by people. Some companies had the opportunity had the resources to do online business, right? Not all companies had. So when people did not want to go to market, which companies were reaping benefits? Only the online companies, isn't it? They could take the online order and deliver it, right? But all the physical shops had to close down because there was a contamination problem, right?
Yes, sir.
Yeah, that is
Understood.
how the arbitraging will help. And the other is information asymmetry and market imperfections. Information asymmetry. Everybody doesn't have information about an opportunity. We don't have. Maybe there are many opportunities in profitable business in India, but the business groups and other entrepreneurs who have been successfully doing business, they will know it faster because they are dealing with they are knowledgeable about the different parts of the country, different higher level people, different dealers and so on. So they will get ideas quickly. And capital, we may not be able to get a bank loan very easily to start a business, but they will be able to. That is how Malia will be getting 9,000 crores, but we think about an ordinary man getting 9,000 rupees. It's not possible because nobody will lend to him because he may not have the wherewithal. Whereas Malia will easily get 9,000 crores or 90,000 crores, right? So that is a kind of imperfection, asymmetry that will be existing in the market. So the business groups will be having an advantage on that because of their might, the existing structure, existing resources, they will be able to get more resources easily. Higher transaction costs like regulatory and contract enforcement issues. So when they are a large group, they will be able to overcome this because within the group there is no such a high transaction cost because it's all controlled by a single entity. Whereas if they have to do the transaction with another producer, say for instance raw material procurement, then there will be a lot of unseen costs. But if your own company is producing the raw materials, you can manage it tightly and you will be able to get the best cost supply. Agency problem with owner control is one issue. That is like Malia is the owner of the company, but Malia himself will redirect the resources for other purposes. Like he want to have a very lavish life, or he wants to take the money abroad and invest all over the world. So that if later on he is caught, asset will be confiscated. And he can also have a global profile. He can have global assets to have a global life. So agency problem with owner control is there. Generally, we consider agency problem only when the owner is not managing the company. That is, owner is only owning. The CEO, another professional manager is managing, and he will do whatever he wants, subject to some of the expectations of the owners. But Malia is an owner. Why he caused the firm to fail? Naresh Goyal of Jet Airways was an owner, right? So in many owner managed cases also companies collapse. That is because there is an agency behavior shown by the owner himself, which is not a theory by theory not expected, which is not expected by theory, but this is happening. This is happening because of the emerging markets and the regulatory system and governance issues and so on. Like Satyam, that Raju was ruining his own company, whereas he is the owner of the company, right? So that is how agency problem with owner control. This can happen because of the institutional mechanism inefficiencies and regulatory issues and gaps and a lot of governance problems and so on. And industry attractiveness and high growth potential would be, profit potential would be another aspect. I hope question is there on any of this. And the next one you have already seen, this is what I said, the difference between the diversification performance in emerging market and developed countries. In developed countries, in normal course, there will be a U-shaped, inverted U-shaped curve. Of course, 30% will be outperforming, but in the developing countries, by and large, all those who diversify would face this unless they individually fail. Because, like in the case of Malia. So that is how the performance will be different in the relevant segment of the curve. Right? So even if they do unrelated also, that's not a problem. That is why Mahindra is not having a lot of loss-making companies. Tata is not having a lot of loss-making companies. Overall is making profits. Same thing is true about other companies in India as well as in other emerging markets as well. And one important aspect about the emerging market is that family-controlled businesses dominate India's large firm business sector, and their owners typically carry dual roles of chairman and CEO. These dual role CEOs are seeking good returns on their own investments in the firm. As such, they are less keen in unrelated diversification without adequate returns. This is a research finding reported by Ramaswamy. Which is a well-quoted work. Which is a well-quoted work. He is not an unknown person. It's a well-quoted work. Okay. So while Manya and Satyam Raju may be there, but in most of the cases that is not the case. The family controlled and they themselves are the as the chairman and CEO, and they will not do blind diversification without evaluating the returns. So they very carefully do the diversification, even if it is unrelated, only in prospective areas. Okay. Any comment on this? Any of you wants to say anything on this? After that, we will have a break. Anything? No? Nothing. And the last one is this one. That is Mahindra Group diversification. They follow a V-form approach. V-form approach means it's a kind of holding company type of thing. That is vertically the businesses have very strong control. That is, the top division will control the companies below that. If subsidiaries are there below that, they will, or divisions are below that, they will tightly control. But between different business lines, divisions, there is not much of a connection. So it is vertical form. That is, the top division controlling unit, that is the division head, will be, even if it is a division subsidiary, that will control the vertical units very tightly. But across the different divisions, there is very little of connection. That is the V form. Whereas in the case of Suzlon Group diversification, they are M form. M form means it's like Hindustan Unilever. That is, they are multi-divisional structure. M form means multi-divisional structure. They are divisions, but there will also be synergy, and the top will be controlling that. It's not, it's an operating structure, it's not a holding company structure. Whereas the V form is more of a holding company structure, right? Operating structure means it is more of operational division, whereas holding company structure means they are just the controlling unit. Other companies are vertical units which will be managing themselves without too much of interrelationship. Like a Tyco's case, you remember the divisions had very little of interrelationship. That is the same. And that is the point about different forms of arrangement in diversification, how different businesses are arranged. And we can also see the case of India as global competitiveness ranking. Of course, I don't want to spend time on this. I will give you break. But of course, when I upload the slides later, this will be available to you. You can just see the data. Okay. So that is with, maybe you can just look at this. M&A based emerging market diversification. People have put forth, researchers have put forth many reasons why M&A based emerging market diversification happens. One is the efficiency theory, which I said earlier. Differential efficiency may be rampant in emerging markets. Information theory. Information asymmetry may be significant in emerging market. M&A process yields more information to improve performance because you are doing due diligence on many of your other players, some competitors. So you get a lot of information to improve yourself. Agency problems. Even in promoter controlled firms, agency problems may abound, which I said earlier. Market power gains may be significant in EM to get more market share. Cross sheltering profits in acquired loss units may be widespread in EM, that is cheating the government. Value approval for acquirer shareholders, that is the purpose. These points I have already said in many ways, that is why I did not give much focus on this. But these pieces of information will be available to you when I upload the slide. So with that, I will conclude this part of the, that is conceptual part of the discussion. If you have any question, you can ask quickly, half-minute question. Otherwise, we move forward. Move forward means break. It is 12:53. After 13 minutes, we will reassemble. 106. Okay. See you. Have your break. Only 28 responded so far. Which are the groups making presentations today? Coach Holdings,
So group 8 for
group
facts.
group 8 for story. And what about the question? Should they listen to Bain?
Sir, group 7 would be taking yes argument.
Group 7, yes argument. So group 6 may be no argument, right? Is
Yes,
that?
sir. Yes, sir.
And what is the exact question? Exact question.
Should Koch Holdings ignore Bain's advice?
Okay. Yeah. Okay. So ready? Group ready? Story group? Quiet?
Yes.
Okay. We have 36 respondents so far. I consider that as our final. Yeah. Share screen activated. You can go ahead.
So good afternoon, everyone. We are Group 8, and we'll be presenting the case facts for the Webby Koch case. So the image before you is of the man behind the business empire. His name is Webby Koch. He was a born entrepreneur. He managed multiple businesses since childhood, and even after establishing a successful business empire, he was able to show his prowess in negotiation and excellent leadership skills. So it is like he was born in 1901, so it's important to understand the political and economic situation of Turkey at the time. So there was very high levels of ethnic tension between the Armenians, Jews, Greeks, and Muslims. And at the time, Turkey was riddled with political turmoil, especially for the better part of the 20th century. There were army coups in 1960, 1971, and 1980, and the political unrest, it led to changes in business dynamics and laws. So there were political efforts made to create a business class with an emphasis on in-country production. And at the time, Turkey was also quite behind in terms of technological advancement. So now that we have a little bit of a context, we can understand Koch's business decisions better with this. So as you can see in the timeline given, Koch started quite young in his entrepreneurial ventures at 16. He capitalized on excellent partnerships and negotiations with businesses and the government. So this is something that was instrumental in taking Koch to the level of an empire. This can be seen especially with the graph that highlights the growth rate of the Turkish GDP at the time and the growth rate of Koch as a company. And you can see that they constantly beat the trend that was ongoing in the country at the time. So coming to a bit more about the structure of the holdings, pre 1963, the Koch companies were increasing rapidly, and all of these companies were independent, but all decisions were made by Webby Koch. Now, there are problems obviously with this kind of setup that they experienced. Firstly, Webby was overworked. He worked 16 hours a day, 6 days a week. So it became difficult for him to oversee everything. So, as you can imagine, there were concerns about how the company would manage after Webby and how one would take over the reins. There was also greater risk for duplication of work and inefficiencies. So, for this situation, the manager of personnel issues in coach companies had suggested restructuring. In 1963, Coach Holding was established. All family shareholdings were transferred to this new entity, and obviously this and Koch Holdings, it became a shareholder of the operating company. Now there were two main legal obstacles with this, which were multiple taxation laws, and there was some lack of clarity with how foundations are established. But this was again something where Very Koch was able to prove his negotiation savvy and actually work with the government, and in some time was able to establish his venture. Pooja will take it from here.
So now coming to the expansion and reorganization part from 1960s to 1980s.
In 1963, Koch Holding was established legally in order to manage the rapid growth in number of Koch subsidiaries. This helped Koch Group to take all the major strategic decisions from start to end with Webby. So in 1965, post the formation of Koch Holdings, 28 companies were divided into four groups, namely automotive, industry, trading, and LPG. And it followed a policy of rapid expansion by growing individual businesses as well as entering into newer segments that were unrelated to it. So the expansion was made to produce components essential for manufacturing operations. Significant investments were done in unrelated businesses like foreign trade, canned business, supermarket chain, banking and insurance, food processing, etc. By the end of 1988, Koch Holding had a portfolio of 92 companies divided into seven groups in 14 different lines of activities. So, in order to strengthen the automotive business of Koch, collaborations were made with Ford and Fiat at different periods of time. Anadol, the first Turkish passenger car, was produced by Autosen in 1966. The three automotive groups, namely Toffers, Autosen, and the Automotive Supplies, collectively were the largest sales business of Koch in 1988. So, speaking about the reorganization part, in 1962, IGAS became the first company in Koch Holdings to open its shares to its employees. In 1982, CAP, which was a safety match manufacturer, went public. Webby used his operating companies to invest in new business fields, thereby creating a complex web of cross ownership. So the reorganization followed like this: that Webby was the chairman of management council. His son Halki Al Siba was the general coordinator, who later became the president and then CEO. His daughter Rami was the vice general
Not
coordinator of.
son Remy or Suna.
Yeah, sure. His son Rami became the vice general coordinator of Koch Holding, and his daughter Suna became the managerial role at Koch Holding. So there was a formation of executive committee in 1970, and in 1972, Webby set up a family council which consisted only of his daughter and his sons. In 1973, Koch Holding R&D was established. In 1980, external debt had reached $16 billion and debt servicing costs were 33% of exports. So in 1988, Webby grew increasingly concerned about diversification and the need to hire professional managers. He hired Bain and Company to examine Koch Group. So in 1988, Bain and Company reported that only a few of KOC's 92 companies had the scale to compete as the economy liberalized. It believed that the businesses were too diversified and had little synergy among them. Next slide. Abhi, next slide. Okay, so we have the dilemma question here, that should KOC Koch Holdings ignore Bain's advice? That's all from our part.
Yeah. Okay, good. So the other groups can take off from here. That is a good summary because it's a detailed case with a lot of details about the macroeconomic changes in Turkey and how the business situation evolved, and how for maybe Koch itself, how things got changed over a period of time. But you have excluded all those unnecessary details and only presented what was important for our understanding and discussion. That's good. Group 7, huh?
Yes, sir.
Yeah.
So our question is, should Koch Holdings ignore Bain's advice? And our argument is yes, it should ignore. Um, so Bain's report, it suggested that Koch Holdings was very weak when evaluated on European basis and was extremely fragile in context of growing Turkish economy. So basically, they said that Koch businesses were too diversified with little synergy, and only few companies had the scale to grow profitably. They also suggested there should be some restructuring of the group, and they had concerns regarding the family-owned group. So, what we would like to say is that Koch Holdings' present structure, it gave it access to capital. So it had a cross ownership kind of structure wherein its businesses used to invest in new businesses, and this led to suffice the capital requirement of the group and the new companies. So any sort of consolidation would disrupt the structure. And we can also see that Koch was a Schumpeterian entrepreneur. So they tried to raise capital through Koch Trade Corporation, and at that moment, Turkey was capital short. Also, Koch tried to persuade government in many of the cases, and tried to develop infrastructure and institutional developments in Turkey. So, being a holding company helped Koch in doing so. Also, holding company organization kind of gave a control mechanism to Koch, and Koch could control all the businesses as he had already wanted. And in Turkey, there was a lot of political and economic instability, and therefore the diversification strategy was kind of logical in a way, because at that time in 1980s, US and European companies were avoiding unrelated diversification. But then in Turkey, since there was a lot of instability, uh, it was better to be diversified in different kind of businesses, so that if one business fails, the group could still benefit from other businesses. And government and regulatory structures were also not reliable. Many a times Koch had to the prime minister had went back on his word in the Ford case, and government also delayed certain plans, as in the case of canned business. So Koch could not continue with the business. So these kind of unreliabilities uh, supported diversification strategy. And Koch Holdings also navigated through institutional void, as we spoke before. So this would have been difficult if the company was acting individually. So also, if we look at Koch Holdings' financial standing, it had growing sales and income, and also the current assets were a lot larger than the current liabilities and net debt, if we see. So the working capital situation was also good, and Koch Holdings did not have any pressing needs, as it was not looking into acquiring any company, or it did not have any financial needs as of now, as of 1988. It was only trying to analyze if the diversification of the group was acceptable, or it could be it could sustain. So since there was no pressure as such, there was no need for Koch group to go for consolidation or foregoing any of the businesses. So that is all we would like to have.
Okay. And you believe that there was no pressure?
Like they would want to go into another businesses maybe, but they did have profit. So we did not, like, they were not looking for acquiring any company, as in case of Eldo and Algo. So uh, so we thought that there was no need as such to go, and even restructuring and
And
doing such
this
changes
belief,
might require
this
cost.
belief is with the conviction, or because you were supposed to argue yes?
So earlier we we were not that convinced about it, but at
Okay.
least for these
That's okay.
points we are
That's okay.
okay.
Yeah, other group. So Amritbhai was arguing as if there was conviction, but then confesses that there is a little bit of conviction problem. So now I am sure you will be able to argue with more conviction, taking proof from the S group.
Sure, sir.
Yeah.
Next slide, Gandharv. Yes, there were many reasons behind Bain's assessment. First of all, we'll focus upon the internal reasons or the challenges that the Koch company faced. The first point being that there was a lack of synergy among the various companies and the divisions. They were too diversified, and it has been mentioned that they had little synergy. This was also
Divya, your video is not working.
so just a second.
Yeah.
Yes, sir. This was also causing a lot of operational and managerial inconsistency and inefficiency. Furthermore, the dependency on the partnerships with the various foreign entities was very high, and Cork company was reliant on the licensed technologies, technical assistance, and other partnerships from those firms. Moreover, there was also lack of absence of enough professional executives. The one of Weby's daughters said that they needed trustable professionals and experienced employees in the top management, which was not possible with the family members holding the positions. Also, there was a lack of clear hierarchy from the top board to the operating managers. This was causing a lot of problem in the integration of the various entities. Moving on to the external factors, there were changing legal and bureaucratic scenarios, which was causing lower entry barriers in the coming future. There was liberation program, privatization programs, and there were also talks about traffic tariff reductions and abolishment of various instructions on the imports. There were also possibilities of new foreign competitors. Most of these competitors were having high capital with them and were also having the required expertise. They were also willing to get a foothold of themselves in the Turkey business environment. Moving on to the relationship and the dependency of Koch on the partners, most of the partnership were basically due to the premise that there were import restrictions which the Turkey earlier faced. On abolishment of these restrictions, the partnerships had imminent danger of existing. With this uncertain nature of partnership, high dependency on those partnerships was a major threat to Koch. Furthermore, there were similar business groups in Turkey which had this technologically unrelated businesses, but their diversification level was much lower than Koch, which was a growing concern in the public as well. Moving on to the next slide.
Am I audible?
Sure, sure.
Next slide, please.
It's on the next slide. Sorry.
Yeah, it's already
Yeah.
there.
Okay. Yeah. Just a okay. So we had already seen what had been the issues that the Cork has been facing, and what are the reasons that Bain had given such a report. So now, to give the final recommendation on this part, we have divided it into three parts, namely what should be the concern in the short run, medium run, and the long run, and what should be the corresponding action that the Cork should take. So in the short run,
Saurabh, there is a little bit of mic issue. Just close the mic and redo it. Just close the mic and redo it. Maybe better. You can do one thing. You can deactivate the video. Maybe things would be better. So close the video. Only give the mic. Close the video. Then things may be better. Saurabh. Close the video. Just give only audio. Yeah, audio. Just give audio. Saurabh. What happened to Saurabh?
So I think he's facing some connectivity issues. He disconnected.
Others can continue. Means resume.
So he is joined back.
Yeah. Oh.
Yes. Sir, am I audible now?
Yes. Don't activate video. Then there would be
Sure,
that.
Sure, sir. Sure, sir. So, sir, one of the problem that has already been seen with the organizations is that, especially those which are owned by family, they go blind with the problems which are occurring in the organization, especially the ones which are owned by family. And that is what happening with Cork. And that is where we require the expertise of external consulting organizations like Bain. So this is the concern in the short run. And what should be the corresponding action is that rather than taking Bain's assessment at the face value, Cork should form a working group of its own executives, which should work along with the consultants of Bain to finally arrive at what should be the exact action plan rather than working on the more abstract assessment of Bain, which it has come out currently. In the medium run, we see that Turkey's economy is at a cusp of transition currently. Previously, Webicock has always worked in the protection of the government. The government has always acted as a shield against the large corporate forces of the West, which were prohibited from entering properly into the Turkish economy. So now that wall has been broken and the economy is going to be at cusp. So what has brought Cork here will not take it in the further future course of action. So at present, Cork needs to, in the medium run, formulate internal changes in the organization structure and transitioning it slowly from the family control towards a more professional driven organization. And finally, in the long run, we see that the Cork group of companies is too much diversified in different segments, which are often unrelated with with hardly any synergies. Now, diversification made sense in previous time when there were not many opportunities in the Turkish economy, and the organization needed to be in multiple segments to make profit. But now, with the opening of the economy, that will not be the case again. So diversification, such unrelated diversification will not make sense. So what will be our recommendation would be to disinvest in the stagnant entities, consolidate the business, focus on the more profitable and attractive opportunities, and then go for gradual expansion into territories which have similar conditions, socio-economic conditions like that of Turkey. So that would be our recommendation in the short run, medium run, and the long run. Thank you.
Okay. So you believe in the Bain advice, and
yes.
Is that with conviction or like Mranmai, half conviction, half not conviction?
Sir, we think that it's more than half a conviction, not full, but more than half a conviction that they should not take the advice at the face value, but they should not ignore it at all. They should definitely work on it with the executive team and the Bain consultant team to further work on the.
If your group has been given the option to choose between yes and no, which you would have chosen?
No, sir.
We would definitely not to ignore. Definitely.
No. That is, you will choose no, right?
Yes, sir. We would choose no.
Which means you are arguing with conviction.
Yes.
Okay. Yes. That Mranmai was with half group was with half conviction. Your group is with full conviction now. Okay.
Yes.
So let's go back. Let me just upload the worksheet. Okay, it's here. Go to one question. Let me just give a question to start with. There's a question. This is except yes and no group, everyone can take. Yes and no group, don't take. Yes and no group means 6 people outside that we have 30 plus. We will see how many have conviction that yes, go for it, don't go for it. Okay, at the end of 30 seconds, we have 20 people saying, no, 22 saying yes and no, out of which, yeah, okay, closing. 19 and 4, 20 and 4, right? Okay. So 1/5 saying no, it was not right, which means ignore it, which is the group 7 side, ignore it towards that. And 20 people are saying, yes, it was right. So don't ignore, act on it. So don't act on it is 1/5, act on it is 4/5, right? So that is where we will start. Now, let me just ask a more simpler question while moving towards this. The question is, you can also send messages through chat, okay? The question is, what are your observations about the diversification of evolution of Coach as a business group. How did diversification contribute to the evolution of Coach Holdings as a business from their inception to the later 1988? Okay, that is what I will ask first. Smriti.
Yes, initially the post the even during the war era and post the war era, they were in quite of the protectionism format in the emerging market situation. So it gave coach an opportunity to explore the opportunities for foreign players to get into their nation with joint ventures. So it allowed them to introduce foreign players into the market. It was an opportunity for them.
So you are saying they responded to emerging market conditions.
Yes,
and then you are saying they leveraged foreign opportunities or they wanted to bring them in?
they leveraged opportunities.
Okay. Leveraging foreign factors, right?
Yes, sir.
Foreign possibilities. Mohit.
Sir, when we see the diversification of coach group as a whole, we see that one is the entrepreneurial mindset of Webby. From the starting, like he has an entrepreneurial mindset. Then there is our political and economical stability due to the quest for survival. On new opportunities being grabbed by Webby to survive into the market. And so the last one is the also in relation to diversification when the Webby has a lot of money and looking for more investment towards us. So these are the three main factors that I see into the three main phases of as a group diversification.
I could hear the entrepreneurial mindset, new opportunities, then survival, and what was the last one? Mohit?
Sir, it was investment returns. So in the last, it invested into LPG gas cylinders and pipes.
Meaning
so
returns,
it was
returns
yes,
on profits.
yes, returns.
Yes.
Yes,
Okay.
yes,
Chitra.
sir.
Chitra.
Yes, sir. So, sir, most of it is mostly covered, but I just want to highlight like what was his initial strategy and how he went on. So he, from the observation, like he observed the merchants from other ethnicity and started into say leather and then grocery business. But later on, he tried to expand into construction business because at that point, the economy was emerging and he found supplying construction material as a good opportunity. But yeah, it is also mentioned in the case that later on he found that he was not making any money out of these businesses. So he divested some of his construction businesses and then pursued kind of like into automobile businesses because they were the key rising opportunity at that time. So he tried to have some dealership or some agency contract with Ford in 1928. And yeah, later on, like he also approached American companies, Ford, GE, then Siemens. Like with GE, he tried to go into electrical equipment and bulb businesses. So he tried to identify what is the economic condition of the country and what will be the best business to venture into. So these were characteristics. And so one more point here, like he was also kind of like not letting go the businesses just because it is dying. So it was also there in later stage of his career. I'm just checking the point.
Which
That was
means,
mentioned.
is it about social motives or social orientation?
Yes, sir. Yeah, he turned into a kind of philanthropist later on. So he was more into social welfare as well.
Okay, social welfare orientation, right? But it also says during the Second World War, there was also compromise on the ethics, right? Surya.
Yes, sir. There's
Surya.
mention of that on the truck business.
Surya. Surya.
So yeah, so towards the end, when we look at the 92 companies from the Baines report, we see that there is a lot of supporting businesses. there's auto, there's commercial, there's heavy vehicles, there's auto supplies. Although not every business has the potential to grow very highly, all the business are interconnected in some way. Like there are clusters of businesses. And
Are you saying many unrelated lines of business, or you are saying all of them are interconnected?
not all of them are interconnected. Again, clusters, many unrelated lines, yes. And I think primarily it's because he looked at each opportunity, again, responding to the market conditions, and he started building that cluster over the course of time. I think this has been a very significant part of his strategy to diversify.
Okay, so okay, coming to, or are you implying that he has consciously tried to diversify his portfolio to deal with the risk, or is it that because they were lucrative, appeared lucrative? What is that? Is it,
I think
risk driven or the profit driven?
I think it is profit driven.
Profit driven. Profit driven means which is the usual habit of or behavior or tendency of any businessman, right?
Yes, sir.
Risk driven means he is more strategically oriented as well, right?
Yes, sir.
Okay. Abhishek Raj. Abhishek.
Yes, sir. I do agree with what Surya said. In my opinion, the whole diversification was based on the two things: the needs of his current companies and the government policy towards imports. So, whenever he found something difficult to import, the components of that are required for his current companies, he either tried to go in a joint venture with foreign companies, or he tried to manufacture them locally, and thus starting a new supporting business. In this
So
way,
are you saying emerging needs? Emerging needs?
yes, sir. And all those businesses were loosely connected with each other, not tightly, but in some way they were complementing each other.
Some connection existed, right? That's what you are saying.
Yes, sir.
Is what I think Surya was also trying to imply that.
Yes, sir, exactly.
Okay. Which means it is not totally unrelated, but some connection. But is that true? There were also, but I would say, so what Surya said was more correct. Many unrelated lines were there, but within the line, many it appeared like a cluster, right?
Yes, sir. So initially there were many unrelated businesses that started, but gradually when he started to consolidate his companies through the holdings, he started venturing into most of the related businesses.
Okay. Vaibhav. Vaibhav.
Sir, I would say that specifically about Webby, I observed three things throughout the case. One, in a positive sense, he's very stubborn because he kept on approaching Ford and other auto companies for decades at end to start manufacturing. So he was very stubborn and very focused with that.
What you said, he was very persistent.
Yes, sir, very persistent. If he had put his mind to something, he wanted to do it. Even if we talk about refrigeration, when GE denied them getting into a JV, he approached a different company to import compressors. So
Okay.
he was very persistent when he had made up his mind. Second, I would say he was very opportunistic. So we see that whenever he went to America or even Japan, he saw trading companies. He would see something new coming up anywhere in the world, and he would think, why can't we do this in Turkey? This solves the problem. So he was opportunistic. Thirdly, I would say that he was, in a way, very, I wouldn't call him strategic, but yes, if we go with the cheese example, he had learned early on that he may not have the expertise to do everything.
Which
So
means he was a quick learner, right? That's what
yes,
you wanted to say.
yes.
Quick
So
learner.
he hired people who knew the industry. He hired people who understood the ins and outs of a business, which really helped him in succeeding with all his ventures.
Which would also imply that he was flexible and adaptable, right?
Yes, sir.
Because as and when he found something, he was immediately moving to that and was not very rigid and egoistic and he did not have any problem in column in even imitating the Greeks and the Armenians and the Jews, right? Even though he was frequently the case was using the word Muslim and Turkey had a divide, but still he did not have any problem. He was also saying jealous of the richer people who were the Armenians, but still he did not have any problem in imitating them whenever he found they were better in something, right?
Yes, sir. Sir, also if there was a need to close down a business, he closed it down. He didn't just keep on getting into losses just because he wanted to run the business.
Yeah, and that is what
That is also good.
he sold businesses too. He did not stick to anything when he did not want it or that was not working well. So, Vaibhav, what you said, that is that particularly four phrases: persistent, optimistic, quick learner, flexible, adaptive. That is a very good characterization of Baby Coach as an entrepreneur, right? Or as a businessman.
Yes.
Okay, now let's moving from there. I would ask this question. The two hands can be removed now because I'll ask fresh questions. You can raise the hands again. Mohit and Abhishek, you can remove the hands from there. My question is, so we saw the evolution of Baby Quest business ventures or business evolution, business activities. Now, when we go to 1988 and relook at his business, what do we see there? What are our first impressions if we take a bird's eye view of 1988, that a cross-section view of 1988 situation of Koch Holdings businesses or Baby Koch businesses? What do we see there? Let me just go also to people. Srigandha, what do you think? From what you saw, the three groups presenting, now discussing, what do you see as the cross-section view of Koch's businesses in 1988? That is on the eve of the Bain report. Srikanda, you are able to hear? Pooja S. Pooja. If you did not read the case, please send a message, direct message that, sorry, I did not read the case. But please don't stay silent, because then it will be construed that you logging in, you have disappeared. Priyanka.
Sir, am I audible?
Sure.
Yeah. So, sir, by 1988, I think they had categorized their businesses into 7 different major categories, uh, which were like the automotive supplies group. Then there were some durable goods businesses. There were businesses with consumer products. They had a construction and mining group, energy and trade group, and foreign trade companies, which had participation of Siemens as well.
So
And
what
the
else do
parent
you
company,
feel?
which was-
Okay. What
Yes,
else
sir?
do you feel for the business portfolio? Piyush.
So the business.
Sorry, you can continue. I thought you stopped.
So it is actually very, very diverse. I mean, inside the 7 different categories, also the businesses are highly diverse. Is what I feel.
Okay, indeed diverse. Okay, Piyush, what do you think?
So by 1998, nearly 41% of their sale was coming from automotive, then 39 from industry, trading, and LPG, and rest from trading companies. So by 1988, it was mostly classified into 3 different clusters: automotive, industry, and trade, and then the sub-diversification. And so it was also able to increase its sales from 17,297 in 76 to 7,920,488 in 1988.
And profits?
So profit also increased as per the balance sheet.
So which means you are
Yes, sir.
saying, as a group, they are still growing. There is growth, very clear growth. And as a
Yes,
group,
sir.
they also made profits. It is not that as
Yes,
a
sir.
group they were faltering, right? They were not
Yes, sir.
faltering. They were growing as a whole, and as a whole, they were also profitable.
Yes, sir.
But then,
Sir,
Shubham,
yes.
Sorry, you want to say something more?
Sir, yeah, for example, in 1985, their sales was 1.5 million and it increased to 7.9 million in 1998. So in just 3 years.
Okay, so there was fast growth, good growth. You are
Yes.
saying growth and not just a good growth, it was good growth, right?
Yes,
In some segments, maybe.
Yes, sir. Yes, sir.
Yeah. Okay. Shubham, 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 Shubham. You are there, Shubham? Just send a message if you are there. Otherwise, it will be construed you are not there. Shubham. Okay. Ritika, Ritika, Ritika.
Yes, sir.
Sorry, Ritika.
Yeah, yes, sir. So can you repeat the question? Like, is it the same question?
Nee, I wanted to ask something. That is just now Piyush said there was good growth and there was
Yes.
also overall profits. But
Yeah.
but all was well with everything.
No, sir. Even if there were growth and profits, but then it was mentioned in the case that the like as Priyanka had mentioned, the diversification was a lot. Probably in the future, it might be difficult to sustain all the different businesses lines that they were going
Why?
into.
What were the reasons? Why future issues could be there? Why? What are the reasons?
So one was because of the fact that like they were the kind of entrepreneur that the person was. So they wanted to get into everything and they wanted to make use of every opportunity. But that does not mean that they should get into everything. Like we see Amazon as well, right? They are getting into everything, but that does not mean they're successful in everything. So it might be good that if they just stick to some businesses instead of diversifying too much.
But are there problems very clearly showing up? See, we can always say this is too many things is not good because too many things will spoil things, right? But are there manifestations, some manifestation?
Sir, I cannot remember as of now.
Mudit, you were part of one group, you did not speak. So do you have any idea on this? Mudit, you are there, Mudit? Koi hai? Mudit? Mudit is not there. Mudit, send a message, otherwise it will be construed you are not there. Mudit. Gandhar. 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 Yeah. Is not present. Mudit is not present. Oh, I see. Okay. Yes. Okay. Gandhar.
So Gandharv is facing some technical issues.
Oh, okay. Yeah. Shailaja. 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 Shailaja, where are you? Don't hesitate to say, even based on what you heard so far. Nirbhay. Nirbhay.
Yes, sir.
Nirbhay.
Yes, sir.
Yeah, what do you think? Ritika was flagging some future issues and she said casually too much of diversification, right?
Yes, sir.
But
Sir,
where there are issues, very specific issues, we can always blame something if people are too much active, right? We even in the class when people are asking too many questions, also some others will feel why is he asking too many questions, right? So we can
yes.
find a fault with everything. There is nothing that is without a fault. But in this case, just to examine the question whether Bain's advice is supportable or unsupportable, Do we see anything there as a result of their evolution from 1920s to 1980?
Sir, I think their Bain's assessment is more based on the
Not
few.
Bain's assessment. We have to see whether Bain has done a good job or not. So it is as a consultant, it's our assessment. So if always a second opinion we take, isn't it? We go to doctor and doctor diagnoses something, and we go to another doctor and see whether the first one is correct or not. It's a second opinion, isn't it?
Yes, sir.
And now here Bain gave a first opinion that you are very bad. Everything is bad. Now they want to take a second opinion. Suppose you have been appointed as the consultant. We have been appointed. So what is our second opinion? That's what we are trying to see. If that second opinion also is very clearly like Bain said, what Bain said is correct. We don't have to suspect Bain's opinion, right?
Yes.
Now, did they do a good job? Then we need to see whether actually situation is difficult.
Sir, until now, if we see at the growth of coach group, so sir, they have outgrown the GDP of the country also, and there are not that many facts they have presented in the case which point to specific problems in the business of
If
coach.
that is the case nearby, they are saying that outperformed Turkish economy, right?
Yes, sir.
But if that is the case, it is not just Bain. Bain, of course, Bain report submitted, and he had to, he saw the report and he even had to worry, and he lit his fifth cigarette of the day, right? You remember the wedding? Fifth cigarette of the day. Generally, the cigarette smokers will be lighting another cigarette when they are in stress. They are anxious. They want to think about something, right? This is one feature of the smokers. Smokers generally smoke more when they are under stress, and many people smoke more because they are stress prone, right? So, what is that stress affecting baby coach? Okay, I will just release you. I will go to some of your other people also.
So can I answer this?
Who is this?
Vishwant.
Vishwant, yeah. Go ahead, Vishwant.
Yeah, so the first key issue that I see is a coach has a high dependence on licensed technologies that are offered by foreign firms. And given that the economy is being liberalized, these foreign firms would explore options to enter Turkey on their own. So after the import restrictions and other barriers are removed, now they might enter Turkey on their own. That would be a problem for coach. And the second thing is that was the most of the holding power of the coach conglomerate was concentrated in the hands of family members, and there were inadequate professional executives. So professionals would be more, suited to make the business grow further rather than family members. So that is the second issue that I see. And also there were hierarchical issues in the organization.
So what you are saying, from what you said, it is implied that they have both external and internal problems, right?
Yes, sir. Yes.
And that means because internal issues are also there, managing the external issues may be difficult. So what is your take, Chitrang, on this? What Vishwant and others said imply that there is an internal problem, external problem, but there is also an internal problem. If you had only external problem, you can manage with your internal capability, competence, resources. But when you also have an internal problem, that becomes a weakness for you, right? Therefore, the threat, external threat, you can't manage because you have an internal weakness. Until you address that weakness, there is a problem. That is, your threat may overpower you. But at the same time, you also need to look at the possibility of addressing the internal threat, right? So, what is your take on that, Chitran?
Yes, sir. So, sir, from internal threat perspective, maybe we can
internal
look
weakness.
at
Internal
weakness perspective. Maybe we can look at the portfolio, what they are operating in, and there are like in Exhibit 11, I can see there are two factors. So
what
overall,
is internal in the first place, Chitran? What is that internal weakness, internal problem?
sir, internal, there are several businesses. So the management has to take care of all the businesses, they have to spend a lot of time there, whether even if it is not independently working, or even if it is not generating enough revenues, or it is not attractive. So they are like kind of liabilities where management has to spend their time. So they are not doing, they may not do it effectively. Like there are profitable, non-profitable businesses. So if you are taking all of them together, you have to justify your time in both these scenarios.
So, but the managerial attention required. But Baby Coach had managed all these for the last for 50 years, right? 50 or more than that, 60, nearly 60 years, right? Why
Yes.
can't the internal people manage it further? Apurva?
So he has.
Chitrang, you have something more to say?
So just wanted to say that they changed the management practices also. Like earlier, Webby was the only one, the prominent figure there, but they have gone into like having a holding company. Then there are board of directors and management committee. These features have also been introduced in the organization recently. So they should also be taken care of. Like he has to put right people. He wanted to put family personnel there in the top positions along with the management.
So, Apurva, by implication, what Chitrang was saying was that since a lot of organizational changes have happened, there is an impact on their ability to meet the challenges. Does that mean that the new family members who are managing the business is not as competent as Baby Coach itself? Is there any anxiety on Baby Coach's part on that, Apurva?
So we can't be sure of that, but I wanted to talk about another data point. If we look at Exhibit 10, it shows a lot of instability and cautious sales growth over the years from 1973 to 1988. So, for example, in 73 it was 20.7%, next year it was minus 2.8, and then it increased to 25.2. And this is what has been going on throughout the years. And it seems to be somewhat related to the real GDP growth as well. So when the GDP growth is higher, they are growing more. When it's lower, they are also going under.
Which is quite natural, no? Because all businesses, GDP is nothing but the sum total of business. So if GDP is not growing, means it is actually the components are not growing, right?
So, but that would be a cause of concern because it seems to be too much related to the GDP growth. And for instance, but there are two instances. For example, in 1979, when the GDP growth was minus 0.5%, they still grew at 76.3%. Like that is the highest growth they had in that year.
So which means your first statement is refuted by yourself, right?
Yes, sir. So generally it's more related, but there are two such instances where it is not. So any business, I think there should be certain stability to it, but we don't see that in the case of this company.
Yes, I understand. Gandharv, I was asking about the internal issues, but Apurva was focusing on the external aspect. Now, external, yes, of course, there is a relation with GDP and the fluctuation in growth was there. But so long as Baby Coach was there, he managed everything. Even in some years where GDP was going down, still Kochi Holdings was growing positively. But is there an anxiety about the organization's ability to meet future challenges, internal ability to meet challenges? Gandhar?
Yes, sir, definitely. While he was in control, the power was basically concentrated in his hand and he could make decisions on his own. And he already had business expertise. So those could be correct. Now, firstly, the competency of his children is in question. Secondly, since it's not a single person anymore, so decision making is concentrated in many hands. So consensus may not be reached or conflict may arise. So competency and conflict are two things that we need to focus on while deciding future managerial implications.
Is there any Mohit? Is there any indication from the past or present that
Yes, sir.
actually there is a conflict possibility? Are there any signals or
Yes,
evidence?
sir. So in the last aspect of the case, it's written then when the Webby was promoting his own sons and daughters in the management position. One of her daughter, Rami, who was given admission to the Wharton Finance School. So he quit. He told her that you have to not go to the B school. You can learn more into the organization here. And then when he started doing more and more research and development centers and training sessions into the organization. So this is one of an aspect wherein the Webby is trying to make sure that the management that he's appointing is competent enough so that the employees of the work of the organization believe in them. But in somehow he has in his mindset that they won't be able to do it, and that's when he has been hiring expert for all of his businesses right from the starting. But now he is not very sure whether these people are capable enough to handle the entire business or not. It's very much evident from the
you said something
case,
about
sir.
I can understand maybe because Sanch about children capability, but you said
Yes,
something about the daughter also. What was it?
It's a in the case it's written then the Rami, one of the daughter of Webby, was given admission to the Wharton Finance School.
Suna maybe you are talking about Suna. Remy is the son, no?
No, sir. Rani was also there. One of her daughter. She was given admission to Wharton Finance School, but Webby told her that you don't have to go there. You can learn more inside the organization. So that's when a conflict or issue or independency issue comes into picture, right? So the Rani, still not very having a business degree, was admitted at the executive position of the organization. So that there's certain kind of.
But she has an BBA degree, graduate degree.
So then we won't be doing MBA from here as well. I'm Code as well now. So I think
no, daughter not given equal status. I understand that. But okay.
Should I try? Chitrang this side. Chitrang this side, sir.
Nee, let me just give also some others opportunity. We have only 1 minute left. I know that. Obik, by giving the name of Suna, confirming the name of Suna, you have inadvertently got into this discussion, right?
Oh no, sir, I was about to raise my hand anyway.
My question is, Obik, my point is that in addition to what Mohit was trying to say about Suna not getting the chance to go for MBA, etc., but was there any kind of little bit of difference of opinion between the daughter and son reflected in the last part of the case? Some issues?
Yes, sir. Actually, I mean, I don't recall exactly what the point of contention was, but then one of them was of the opinion that there should be professional handling of the business more than family-owned members. Although I doubt that they were incompetent as far as the question was concerned, because one of them had strictly observed the fiberglass fiberglass model of car, and that is how.
Yeah.
Sir, hello.
Rahimi, son.
Yes, sir. Rami had observed the fiberglass model of car, and that is how that portion of the business started. And both of them were well qualified, well educated, and they were occupying higher positions in the board. Does not mean that they had not interned with the company or they had no experience with the company as such. So, yes, I mean, I won't guess that they were incompetent.
Yeah, I understand that you are not fully convinced that there is a competence issue, but while it is also true what Mohit said was, even baby coach himself is not very sure about their children's ability to carry this forward, because already even in the last 4 years, Remy was managing the company, but already problems have come because it is after 4 years that Bain is giving this report that yes, there is a problem. So I can understand why maybe coach is a little anxious whether his children will be able to do it or not. At least he's not
That's the point
confident.
that even in India, if you could observe that by inheritance, such businesses are passed on, but they are not big failures. They are under observation in the beginning. And one of the major points was, Bain could have influenced his decision, right? Could have biased his opinions about his children and his management as such. The Bain's report. So it wasn't all of a sudden he finds that his entire work is a sham. It wasn't there beforehand. He had called in Bain to
Mridmai,
the quality of his business.
Mridmai, while Abhik was not confirming the son-daughter difference, don't you think there was already some hint in the case that the daughter did not fully agree with the son?
Yes, sir. Sir, when Rami was made the new chairman, Suna had also written a letter to family council expressing some concerns, and there were always some decision-making differences among both of these. So there were issues with what the future of the Koch holding would be.
So that would also remind us about the Ambani, post-Ambani difference of opinion between Mukesh and Anil, right? That is the way that their difference of opinion also erupted. Initially, they might have been okay by and large, but maybe some difference on some issues. But gradually, that blew up into a major division, right, between the two, and that is why the whole empire was divided into two. Of course, Anil lost out, right? Don't you think that is the way things can go? Maybe coach himself may be a little anxious about that.
Yes, sir. And maybe even after a certain generation, the group might be divided. So that is a risk.
And if that is the case, last point, the only one last opinion. If that is the case, don't you think Viviko's anxiety and the Bain's report would be pointing to the same thing? There is a palpable anxiety about the future, and it may be better for Viviko and the group to be a little more focused, so that even if the group is divided into two between Remy and Suna, still the two lines would be well protected, better protected, rather than two probably incompetent or less competent people managing completely unrelated things. If the two are more, the entire group is more focused and then divided between the two people for managing, things will work out better even after baby coach. So that is one last point. Whoever wants to answer can answer, otherwise I will close.
So they could go for some restructuring, but then as Bain report also pointed out that they should forego certain businesses that might not be that coach could go for. But yes, for company restructuring and top
But
management
when
restructuring.
restructuring happens, automatically some refocusing will also happen. No? In their judgment, if, for instance, we have an exhibit showing the distribution of all the businesses based on two axes, right? X-axis showing one, and Y-axis showing the inherent profitability and manageability. On the basis of that, we see that there are some businesses which are categorized as low on both counts, right? So those businesses which are low on both variables could be forgone, isn't it?
Yes, sir.
Okay, so with that we will conclude this. Of course, Ankit was saying something. You mostly have concerns in running the family business. Of course, this and Gandharv also said something. It has been mentioned that they had difference. Yes, when I may not be getting an opportunity to present this summary because in the first module this is my last session, and I will come back only in the 13th session now, and balance everything will be second module, and the last module most of the sessions will be taken by Professor Rajesh. So I by the time I reach the 13th session, probably some of the discussions you may miss out. Therefore, I may send a couple of slides as summary to you. So if you have any opinion or objection or reservation on that, you can come back to me by sending mail to me, messages to me. Okay, mail message to me. So I will share with you a couple of slides related to the summary of this discussion. Of course, in the 13th session, I will show the slides back. But to ensure that you don't forget the discussion by then, I will send this summary slides to you. Okay, if you have any opinion, you can get back. Okay, all the best. See you in the 13th session. Remaining sessions will be taken by Professor Rajesh. Okay, bye-bye. Enjoy. See you. Bye-bye.
Bye, sir.